You start off with a private company is eligible to sell stock on the United States Stock Exchange by doing what's called an initial public offering, in which shares of the company are sold to institutional investors, such as banks, hedge funds, whatever, and also retail individual investors, people like you and me. And a typical IPO, as it's called, is underwritten by investment banks who also arrange for the shares to be listed on one or more stock exchanges. Now, how do you, to do an initial public offering is a time-consuming and very expensive process.
That's right.
You have to have an investment bank, you've got to have accounting firms, you've got to have audited financial statements, you've got to jump through all these hoops that the Securities and Exchange Commission requires so that the shares that you're offering sort of pass scrutiny, that they're not completely fraudulent. I mean, this all started back in the 1930s when so many people lost enormous amounts of money in the Great Depression and so on because there were so many scam companies out there. Well, it's been cleaned up quite a bit since then. But so a company in China that comes over to sell stock in the United States, they have to do this. They either have to do their own initial public offering, or the typical way in which it's done is through a reverse merger. And I don't want to get too complicated, but basically a reverse merger is there's a dormant, what they call shell company, that is the company that's already been formed, that may have been used for another vehicle. It's sitting there, and a Chinese company or an overseas company can come in and invest in that company and end up taking control of that company. And then because that company's already registered, can then start the sale of stock shares. That's an easier and cheaper way for the company, an overseas company, to get into the U.S. market. And there's nothing illegal about doing that, but it does avoid a lot of the scrutiny that would take place had the initial public offering been done here in the United States. And so a lot of Chinese companies have gone that route. And to be sure, there's plenty of companies in the whole world, including in China, that are well-run, well-managed, and produce profits for their investors. But the news headlines in the United States comes from the scams that have come from the Chinese companies.
That's right.
If you invest in a company here in the United States and the stock price fluctuates wildly, it's at $10 one day and plunges to 50 cents a week later, there's usually lawsuits. There's lawsuits against the accounting firms. There's lawsuits against the underwriter, the investment banks behind it. Well, what happens if that happens with a Chinese company? The U.S. investors are often left holding nothing, because even if you get a judgment against a Chinese company, it is almost impossible to enforce that in China. China doesn't recognize it. They have their own laws, and internal Chinese regulations guard internal financial aspects of companies as almost akin to state secrets. So you cannot get the information. So what happens with some of these IPOs that come out of China is the product may look great. There's so many different examples. There's a car parts company. There was a hog farm company. Yep. The hog farm company, the stock started at maybe a couple dollars and went up to $10. So if you bought an initial public offering and sold, you double or triple your money. Sounds fantastic, right? Well, after time, the stock price starts to drift lower. And why is it drifting lower? Because it turns out that there weren't any hogs. The entire thing was a scam, and they tried to hide that by saying that the hogs had died. It's for some illness. I mean, some of the stuff is so outrageous it's comical. There have been stories of investors going to China and touring factories and getting audit statements from a Chinese-based or Hong Kong-based accounting firm, coming back, and there's an IPO, stock price goes up, everybody's happy, and then the company doesn't follow through. There's periodic filings that the company has to file with the Securities and Exchange Commission. They don't do that, right. And financial information gets harder to get, and the stock price starts to drift lower and lower and lower, and then an investigation starts, and it determined that the factory was fake.
That's
that
right.
It was rented with actors hired, or sometimes they'll take an existing factory that's actually producing something and change the name on the outside.
Right.
And there's been stuff on the web that people have tracked down, that a sign on the web is for some company that's doing an IPO is actually a different company, and some clever person just photoshopped the sign on it. I mean, the opportunities for scams and the scams that have happened are almost infinite in possibilities. So there's story after story after story about Chinese IPOs that looked and sounded great and actually made money in the beginning, but then because there was nothing behind it, the filings fall off, the stock price plunges, and lawsuits are brought against everybody that they could deep pocket, perhaps the United States, an accounting firm in the U.S. that may have been involved, an investment bank in the U.S. that may have been involved. But to try and get the money, money from an IPO there's usually a lot of millions of dollars raised, and that can sometimes get transferred to banks in the Virgin Islands, British Virgin Islands,
right,
which then gets transferred into China, and you will never be able to find that money.
right.
British Virgin Islands is a wonderful place because of the banker secrecy laws. I'm sorry, Jason, go ahead.
Let me ask you about that then. And I know we talked about a lot of this regarding the fake companies and all these things that they were doing. Have you seen now the scrutiny be different with new IPOs that are coming in? Are they changing the laws in terms of making it more difficult or regulating it more deeply than before?
Well, everyone's heard of, or many investors have heard of Bernie Madoff, who ran one of the biggest scams in the history of the world, at least the modern world. And following that, the Securities and Exchange Commission really clamped down on a lot of stuff. There's a lot more scrutiny now, a lot more hoops to jump through. I would say that a Chinese company wanting to do an IPO in the post-Madoff world that we're living in now has to jump through more regulatory hurdles. That doesn't mean that fraud is not going to continue, but if someone was considering investing in a Chinese company that's trading on the United States Stock Exchange, you really better know what you're doing, and you really better have extensive due diligence and not rely on something off the internet, an accounting report that emanates from a firm in China, because if your investment goes south, you will have very little recourse to do anything, and that's the biggest danger.
Right.
You cannot. The Chinese is an enormous, booming economy, but they have their own rules and regulations, and they're not aligned with the United States. And good luck to you trying to find money that was transferred into China. You're just not going to be able to do it.
Yeah, so that's a really interesting thing in terms of just the systems being different. And I know that you also do a lot of internal investigations. Have you been in a situation where one of your companies trying to acquire a Chinese company that you guys did some investigation on and reveal some stuff? I mean, how do you verify that what your clients are buying is actually what they're buying?
Well, my first advice if a client is thinking about investing in a place in China is why are you doing this, and what due diligence has been done, and how do you know the numbers are accurate? Because you cannot get, at least as of recently, you cannot get an American accounting firm to go in and audit the books of a company in China. China will not allow it. And so you have to rely on, and I've seen this, an opinion from a Chinese-based accounting firm or an opinion based on a Hong Kong-based accounting firm. And maybe they did, in their view, a good due diligence, but unless you're there and you really know what's going on, and you may never really know what's going on, it's very, very difficult to do. So there is more regulation now. I do think it's harder, but you've got to be extremely careful. I mean, if you're investing, the average investor should not touch a Chinese company, and if someone's got some money to play with, and it's got to be complete risk capital, and you have to do some sort of extensive hire some private firm to do some due diligence. Maybe they have contacts in China that can verify whether the company is valid or not.
Right, which is too bad because when we started this conversation, you were saying that there's a lot of companies over there that are making money, that are real companies, but it just takes a couple bad actors, and it can be from any country, right? We have people here in the United States constantly doing that also. So, but it's because it's such a private country in a lot of ways, it makes it very difficult to get a lot of information, which obviously adds a layer of complexity to it.
I mean, in the United States, the vast majority of stocks that get traded are valid companies that are making money. If the stock price goes down, it's market factors. There is fraud that goes on, to be sure, everywhere.
Right.
But you have more of a recourse in this country. And I mean, Alibaba, which many people have heard of, is this giant sort of Amazon-ish Chinese company, and the founder of that, extremely smart, successful business person. But even some of Alibaba's accounting practices have been under investigation by the SEC. I actually don't know where that currently stands, but I mean, everything gets challenged and looked at, and many U.S. companies are the same.